All right, hello everyone. Thanks for tuning in to this week's Weekly Report. We're going to take a look at what's been going on with some of the legal cannabis and medicinal marijuana equities. I figured I'd have a little bit of mood music here to get us all in the mood. Supply and demand are more significant than at others. If you understand where these trends are and how to recognize these levels, it can help your trading and investing. Well, we don't really use any of the traditional techniques. Well, we use a lot of traditional techniques, but we don't use things such as GAN theory or Elliott waves because we believe that's like Bigfoot and UFOs. It's fun to talk about, but it's hardly credible. When I say some of the traditional techniques we do use, of course we do. We look at support levels, resistance levels, trends, oversold, overbought, momentum, things like that. So we'll get to that when we come to it. All right, we focus on these 5 themes and opportunities in these markets. First of all, it's complete widespread social acceptance. I mean, it's hard to find anyone who's against legal marijuana or cannabis these days. Now that society's starting to realize the medicinal effects, the positive effects from medicinal use, such as autism, pain management, and so forth and so on. We believe it's inevitably going to be legal federally. And there's obviously the recreational sectors, which is what most people think about. But I think more of the opportunities for investments are going to be in the medicinal areas because this is really a biotech play. So some of the companies we're going to look at today are biotech or medicinal companies. And then, of course, there's all the peripheral or ancillary opportunities. And I like to talk about Levi Strauss with the gold rush, right? 98% of the people that went to the gold rush in California didn't make any money, actually went broke. It was only like the first guys in the first few weeks or few months that got there that got all the claims and got all the gold, and yet the gold rush went on for 5 years or so. But guess what? A guy like Levi Strauss comes along and says, you know what? Whether a miner makes money or finds gold or doesn't, they're still going to need to buy jeans. So he sold jeans to the miners, and the company's still around. So we are looking on the side industries. Like, I don't think that if a company's value is related to marijuana in itself, it's probably not a good play because their market has become completely glutted. But like I said, the peripheral opportunities, who makes the bottles, who makes the packaging, are the police going to get, breath detectors that they can use, and who makes the components for those, and so forth and so on. All right, so first we want to look at Apria. We've been talking about this 1130 level for a while. Yeah. Hold on, honey, I'm on the phone. So we've been talking about this 1130 level for a while, and that broke here, and now it's support. Now it's resistance. And then on the bottom side, the 1025 level has been on the lower side. So going forward, we'll keep looking to 1130 for resistance and 1025 for support. If it does break this level on the upside, there's going to be some significant resistance here at 13. There was support back here. And you can see each time it got up to this level, it got overbought and quickly reverted. Okay, Aurora Cannabis, this 7 level looks like it's getting taken out here, meaning it's going to break. And here's something to think about, right? When it got to the 7 level here, it was oversold, right? When it got to the 7 level here, it was oversold. It got to the 7 level here, and now it's trading sideways. So that could be indicative that the trend is going to keep going the way it was going before, and this is just a consolidation as opposed to a reversal. When I talk about oversold here, well, what that means is that it's more than 2 standard definitions away from its average price of the past 20 days, right? So as we all remember from statistics, right? Yeah. If it's 2 standard deviations, 95% of the trading should be within these bands here, these Bollinger Bands. So when it gets outside of it, that means it's oversold, or on the upside, it's overbought. And generally, those things revert, at least in the short term. Kronos Group continues to trade between 8 and 550. So you can see 8 here, 8 here, 8 here, 550 was the low. Got to 550 here yesterday. I mean, maybe like 560 was the low, but it was oversold, so it's rebounding a little bit today. So keep watching those levels going forward. Emerald Health, this is a trade that we got into. I talked about it 2 weeks ago and last week. I bought it here at 2 for no other reason than it broke its downtrend. It's at an important level psychologically, which is the 2 level, right? It was important back here. And anytime something goes from 3 to 2, there's going to be bottom fishers. So it was oversold. I bought it on the uptrend at 2. On this day, which was the 30th, it got up to 246 and I sold it. I set up here that my target was 245. I mean, sorry, 250. But when I have targets that are around levels like this, I always give myself a few cents discretion because there's going to be a lot of supply at this level, and I don't want to miss it for a few cents. And look what happened. I sold it at 245, and now it's back down to 226. So you should always give yourself a few cents discretion if you're using a round level like $50 or $100 or 250, because there's a chance it might not get there, and you're going to miss this trade for a penny sometimes. All right, this GW Pharmaceuticals has broken its support, trending lower. Now, I talked about this last week as a potential trade if it came off of this level and broke this downtrend line. However, I never took a position because the downtrend line was never broken. So that's an important thing to remember. Too many people try to catch the exact bottom and bottom fish, and I think that's really just a psychological need to prove you're smart, because if you wait till this thing is back on its way up, the risk-reward ratio is going to be much better than just trying to catch a bottom, because if you're trying to catch a bottom, you're really just guessing. Okay, here's this Horizons Life, the ETF. This thing is kind of trending lower, broke 13. Volume is really, really dried up here. So really not too much to say about this one. It's probably just going to consolidate, maybe watch this low here. See if it gets back down to that. You might want to buy some. Longer term, if you want to buy it, you may want to wait until it breaks this 15 level on the upside. I know that's counterintuitive, but once again, think about risk-reward ratios. If you have, say, a $20 target, and you buy it here, well, it might not ever get through this 15 level. All right, this in Innovative Industrial Properties, there's been support at 3250. Okay, now it seems like it's kind of broken it. The last 3 days, that's been the top of the range. Today, as we speak, it's trading at 3220. So, if you want to play the long side of this, you may want to stay away from it for a little while, see how this plays out. Insits continues to test support at the 650 level. You can see it's a little bit oversold here. So probably going to bounce a little, or at least just consolidate a little bit more before it breaks this level, if inevitably that's what it's going to do. Kush Bottles, again, this is like we spoke about, a play on the ancillary or peripheral industries. What do these guys do? They make bottles. What do people put marijuana in it? They put it in bottles. So I love the name Kush. The Kush is a mountain range in Mexico where some of the really strong marijuana comes from, supposedly. Not that I would know. You can see this 450 level is important. We got to it here in March, but we were oversold, so we rebounded. Got to it here, 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 and we're still there. Now, this is kind of a real company in the sense that there's real Wall Street people following it, real broker-dealers. There's some real institutions getting into it. And I mean, people with institutional money, not just some guy sitting in a room day trading somewhere like I do. But there's probably a firm that's out there saying, you know what, take a stand, buy as much as you can at 450. Don't try to do better. Maybe this particular hedge fund or investment fund knows that there's other buyers around at, say, 445 or 440. So if they try to get too cute, they might miss it. Like, say they go to 425, and then one of these other buyers steps up in a huge block trades at 445, then that's it. You could have missed your chance to buy this. So sometimes you'll see this action where a fund is just taking a stand and just saying, if you can own all the stock we want to own it at 450. Don't try to do better. Don't get cute, because we don't want to risk missing it. Scott's Miracle-Gro is reported today, so it's kind of going crazy. You can see the highs are around 83, lows are down maybe around 74. Obviously, you're going to stay away from this one. I will say this, though. You can see that it's at the same bottom that it was right here in May, right? So there are probably traders looking at this saying, if this thing turns around, I'm going to buy it. And what this means is it opened here, traded as low as here, and as high as here, and now it's trading there. So if this thing starts to rally a little bit, you're going to probably see some fast money momentum players get in there. And, this will be something that plays out this afternoon. This isn't really a long-term thing. I don't know what to say about this stock. I guess I'd probably stay away from it just based on the fact that it looks like there's more resistance out there that's important than support. See, like this level will be resistance again if it does rally. And if it closes below this level today, then the 76.50 level is going to be a resistance level as well. All right, here's Weed, the Canopy Growth Corporation. You can see the 33.50 level was important here. So basically over the last 2 weeks, it's just been consolidating right around that level. So it's going to take a while to see which way this one wants to go as well. And we do follow some of the other stocks, but we're really only just trying to point out things that we see that are relevant. It's really just like a roadmap to know where these levels are. And if we do see a trade like we did in the Emerald Health, we let you know. Now, this is something I talk to institutions about. If you're a day trader, you probably don't need to worry about it, but is there significant liquidity and volume to acquire a meaningful position? I worked for a PM one time who thought he knew a lot about the markets, but he didn't. And this guy would come out of his office with these ideas like, oh, we should buy this stock, we should buy that stock. And then it turns out like to get a position for the fund, we would need to buy 1 million shares of it, say theoretically. Then you look at the average trading volume and it trades 100 shares a day. Some days it doesn't even trade. So that's what's called liquidity risk. Now, most PMs I've worked for are more astute than that particular individual, but it still needs to be considered. A lot of institutions kind of have a rule that if they need to buy more than 30% of the average daily volume, or conversely, if they have to buy more than 3 days worth of average daily volume, they'll stay away from it. They just don't think it's liquid enough. These things are going to trade like small cap and micro cap stocks because they're just too illiquid for algorithms to trade them. I mean, if you want to buy 100,000 shares of Apple that trades 20 million shares a day, that's an easy trade to put in an algorithm. If you want to buy 100,000 shares of a stock that trades 5,000 shares a day, well, that's going to require some work because algorithms don't work with that. You got to watch the Canadian US dollar rate because most of these companies, well, a lot of these companies are in Canada. You have to consider, are you going to trade the ADR or are you going to trade on the primary exchange in Canada? We've seen important support and resistance levels are starting to develop. These things are getting a trading history now. It takes time and volume to make levels relevant. And they're more important than others, so now we're seeing that. And then last thing you want to look at if you're an institution is what brokers are trading these stocks. Are they reputable or brokers you've never heard of? If they're reputable, then that's a better indication that there are